Welcome back to Boni's Life, crypto enthusiasts. I'm your host, Boni, and today we're diving deep into the crypto ocean to explore what's really happening beneath the surface. Whether you're a seasoned trader or just crypto curious, this episode is packed with insights that will help you navigate these fascinating digital waters. Today's episode is particularly special as we're looking at the total market capitalization, open interest, leverage ratios, and the ever-dramatic fear and greed index. We'll conduct technical analysis of major cryptocurrencies including Bitcoin, Ethereum, Solana, Cardano, Sui, and XRP. And in our second segment, we'll review the groundbreaking Token 2049 and Consensus 2025 conferences that just wrapped up. So grab your hardware wallets and secure those private keys. We're about to get technical, analytical, and maybe just a little philosophical about the future of money. Let's dive in. Let's start with the big picture. The total cryptocurrency market capitalization currently stands at approximately $3.44 trillion. That's trillion with a T, folks. To put that in perspective, that's larger than the GDP of most countries. Not bad for an asset class that many traditional finance experts dismissed as a fad just a decade ago. Bitcoin dominance is holding strong at 59.7%, showing that despite the proliferation of thousands of altcoins, the original cryptocurrency still commands the lion's share of the market. Ethereum follows at 9.12%, which might seem small in comparison, but represents over $300 billion in value. Now let's talk about market sentiment. The Crypto Fear and Greed Index currently sits at 65, placing us firmly in greed territory. This is a significant shift from just 3 months ago when we were at 38 in fear territory. For those new to crypto, this index works like an emotional thermometer for the market. Extreme fear can signal that investors are too worried and assets might be undervalued. Extreme greed means the market might be due for a correction. At 65, we're seeing optimism, but we're not yet at the euphoric levels that typically precede major corrections. Let's look at some key metrics that sophisticated traders monitor. Open interest in Bitcoin futures currently stands at $24.2 billion across major exchanges. This represents the total number of outstanding derivative contracts that have not been settled. For Ethereum, open interest is at $11.8 billion. These numbers tell us about the amount of money flowing into the derivatives market, which can signal increasing institutional participation. Speaking of leverage, the estimated leverage ratio for Bitcoin is currently at 0.23, while Ethereum's is significantly higher at 0.57, more than double Bitcoin's. This higher leverage in the Ethereum ecosystem suggests traders are taking on more risk with ETH positions, potentially setting up for more volatile price movements if the market shifts direction. Now, let's move on to the technical analysis of major cryptocurrencies, starting with the king itself, Bitcoin. Bitcoin is currently trading around $103,557, showing a slight pullback of 0.23% in the last 24 hours. After breaking through the psychologically important $100,000 barrier, Bitcoin has been consolidating, which is actually healthy behavior after such a significant milestone. Looking at the technical indicators, the RSI Relative Strength Index is in neutral territory around 55. Suggesting balanced momentum rather than overbought or oversold conditions. The MACD is showing a slight bearish divergence on the daily time frame, which could indicate some short-term downward pressure. Support levels to watch are at $98,000 and $95,000, while resistance levels sit at $105,500 and $110,000. Bitcoin remains above both its 50-day and 200-day moving averages, confirming the long-term bullish trend remains intact. What's particularly interesting about Bitcoin in 2025 is how the narratives have evolved. We're seeing continued institutional adoption, with Bitcoin being integrated into corporate treasuries and institutional portfolios. The sustained inflows into spot Bitcoin ETFs are driving demand, and we're witnessing an increasing number of countries exploring or implementing Bitcoin as legal tender or reserve asset. On the development front, Lightning Network capacity has increased by 45% year over year, and Bitcoin core development remains active with a focus on scalability and privacy enhancements. Taproot adoption continues to expand, enabling more complex smart contract functionality. The outlook for Bitcoin suggests we're in a consolidation phase after breaking the significant $100,000 barrier. While short-term indicators show mixed signals, the long-term trend remains bullish, supported by strong fundamentals, increasing adoption, and favorable market structure. The immediate price target to watch is the $110,000 level, which, if broken, could accelerate momentum toward the $125,000 to $150,000 range. Moving on to Ethereum, the second largest cryptocurrency by market cap, ETH is currently trading at $2,548, down 5% in the last 24 hours, but up an impressive 45% from the previous week. Ethereum recently experienced a remarkable price rally, surging by over 35% at its peak, marking its strongest performance since December 2020. The price is currently consolidating around the $2,500 level after reaching a local high of $2,633. The RSI is currently at 28.61, indicating oversold conditions and potential for a rebound. Support levels are at 2,400 to 2,350, with secondary support at 2,260 to 2,110. Resistance levels are 2,650, with stronger barriers at 2,700 and 2,850. What's driving Ethereum's recent performance? The successful implementation of the Pectra upgrade on May 7, 2025, Ethereum's most ambitious update since the merge in 2022, has renewed investor interest. This upgrade introduced several major Ethereum improvement proposals. 1. Enhanced wallet capabilities, allowing wallets to act more like smart contracts. 2. Increased staking cap from 32 ETH to 2048 ETH, reducing hardware requirements for validators. 3. Expanded blob space for Layer 2 solutions, enabling larger transaction volumes at lower fees. We're also seeing a shift from leverage trading to spot buying and staking, with institutional staking expected to increase following the staking cap increase. However, ETH is still trading below its 2021 all-time high of $4,878, suggesting potential for further growth. Ethereum is at a critical juncture, with recent technical upgrades renewing investor interest while facing mounting competition from alternative Layer 1 blockchains. The immediate outlook will depend on whether ETH can reclaim the $2,700 resistance or find stable footing around $2,500 before making another upward move. Solana has been one of the standout performers in the crypto market, currently trading at $172.64, up 0.93% in the last 24 hours. While it's down 0.27% week over week, it's up an impressive 39.35% month over month. Solana has shown strong performance in 2025, currently consolidating after reaching its all-time high of $294.85 in January 2025. The buyer-seller ratio shows 80% buyers versus 26% sellers, indicating strong buying pressure. Support levels are at $145 and $124, while resistance levels are at $184, $200, and $262. Technical indicators suggest an approaching golden cross formation, which could signal further bullish momentum. The 24-hour volume is at $4.16 billion, up 4.48%, showing active trading interest. What makes Solana particularly interesting is its continued focus on transaction speed and scalability, with the ability to process 50,000 plus transactions per second. Recent developments include a $100 million injection into DeFi development on Solana and its emergence as a preferred platform for meme coins due to low fees and high speed. Solana has outpaced Ethereum in monthly on-chain trading volume for the past 4 months, with over $640 billion in on-chain volume recorded last year. VanEck predicts SOL could reach $520 before the end of 2025, showing significant institutional confidence in the project. The outlook for Solana suggests potential for further price appreciation, with analysts targeting the $200 to $262 range in the near term. However, the significant gap between current price and January's all-time high indicates potential volatility ahead. Cardano is currently trading at $0.7709, down 5.70% in the last 24 hours, but up an impressive 22% over the past week. It's currently trading just above a key support level, after breaking out of a multi-month falling wedge pattern on the 3-day chart. The technical picture shows primary support at 75 cents and secondary at 70 cents, with immediate resistance at 84 cents and stronger barriers at $1 and $1.20. Exchange flows show $9.18 million in net outflows as of May 15th, suggesting accumulation and reduced selling pressure. What's particularly interesting about Cardano is the extreme bullish sentiment among retail traders, with 89.56% of Binance accounts holding long positions. This strong retail optimism provides momentum, but also creates risk of cascading liquidations if support levels fail. On the development front, Cardano continues implementation of the Voltaire era, focusing on governance and self-sustainability, along with enhancement of smart contract capabilities and developer tools. The project is seeing increasing institutional recognition, now ranking 4th in Grayscale's top crypto assets with an 8.6% weekly gain. The Japanese market has shown significant interest, with over $295 million in ADA JPY trading volume. Technical analysis points to a potential 15% rally, targeting the $1.20 price zone if current support levels hold. Sui has been one of the breakout stars in the crypto market, currently trading at $3.90, consolidating near $3.52 after a 72% weekly surge. It currently ranks 11th in global crypto rankings by market cap. The RSI has cooled down to 46.21 from previous overbought territory, with support levels at $3.45 and $3.30, and resistance levels at $3.60, $4, and $4.20. Trading volume has declined to 105.44 million, confirming reduced speculative interest. Sui has positioned itself as a DeFi powerhouse with explosive growth in total value locked, TVL, currently at $1.812 billion. The launch of Grayscale SUI Trust and potential ETF filings indicate growing institutional interest. Development activity includes integration of advanced restaking and cross-chain liquidity solutions, with projects like Babylon Labs and Lombard Protocol attracting users. The network has a strong bridge TVL of $1.571 billion and is processing over $202,000 in app revenue and $59,797 in chain fees in 24 hours. Sui is at a critical juncture with an impending $265 million token unlock on May 1st, which will test market absorption capacity. If the price can break above the $4.20 resistance, it could potentially run toward $5 and retest its all-time high at $5.35. XRP is currently trading at $2.60, up 0.77% in the last 24 hours, and an impressive 20% this month. It recently reached $2.65, one of the highest levels in over 2 months. XRP has experienced a significant surge in recent weeks, breaking through key resistance levels and establishing strong upward momentum. The price action shows a decisive breakout from a bearish head and shoulders pattern that had formed from December 2024 to April 2025. Support levels are at $2.44, $1.83, and $1.60, with resistance levels at $2.60, $3, and $3.40. The RSI is at 61.77, approaching overbought conditions but still with room to run. The key narrative driving XRP's recent performance is regulatory clarity, with the SEC lawsuit resolution reducing the fine from $125 million to $50 million and confirming XRP's non-security status. There's also significant speculation around potential XRP spot ETF applications, with BlackRock reportedly meeting with the SEC. Whale accumulation has been notable, with wallets holding 10 to 100 million, XRP accumulating 880 million tokens from April to May 8, 2025. Global trading has seen significant volume spikes in South Korean exchanges like Upbit and Bithumb. Short-term forecasts from CoinDesk's AI model predict $2.85 by June 1, 2025, while Standard Chartered projects $5.50 by December 2025. Long-term potential includes forecasts of $8 in 2026 and $12.50 by 2028. Now, let's shift gears and dive into the two major crypto conferences that have just wrapped up: Token 2049 Dubai and Consensus 2025 Toronto. These events are more than just industry gatherings. They're barometers for the entire crypto ecosystem, showcasing emerging trends, new technologies, and shifting narratives. Token 2049 Dubai 2025 established itself as one of the most influential events in the global crypto industry, bringing together developers, investors, industry leaders, and policymakers from around the world. 5 key trends emerged from the conference. First, stablecoins and their role in global payments were a major focus, with industry leaders like Circle co-founder Jeremy Allaire and Tether CEO Paolo Ardoino exploring their growing importance in cross-border payments, corporate finance, and inclusive banking. Second, asset tokenization of real-world assets, RWAs, was one of the most closely watched developments, with thought leaders from BlackRock, Apollo, and Securitize explaining how blockchain transforms ownership and transfer of real estate, bonds, and private equity. Third, The convergence of Web3 and AI gained a significant momentum, with companies such as NEAR Protocol, Eigenlabs, and Intelligent Internet presenting the latest developments in decentralized AI infrastructure and on-chain automation. AI is emerging not just as a tool for Web3, but as a native participant and autonomous decision maker within blockchain ecosystems. Fourth, the evolution of the multi-chain landscape remained a key focus, with various platforms presenting distinct visions. Solana showcased its roadmap for high-speed on-chain capital markets. Aptos emphasized fast and secure payment systems. Sui promoted its modular architecture, and Ethereum explored Layer 2 scaling and ecosystem governance. Finally, as crypto adoption continues to scale, the balance between regulation and decentralization stood as a core theme, with a shift from restrictive stances to more proactive, collaborative frameworks. Token 2049 Dubai 2025 set the tone for what's next in the industry, revealing how Web3 continues to scale, standardize, and evolve toward real-world utility. Consensus 2025, hosted by CoinDesk in Toronto from May 14th to 16th, brought together over 20,000 developers, investors, regulators, and founders, featuring one of the industry's most impressive speaker lineups to date. The conference featured an exceptional lineup of keynote speakers, including Eric Trump, Charles Hoskinson, Kevin O'Leary, Adrian Harris, Anthony Scaramucci, and a premiere of Vitalik, an Ethereum story featuring Vitalik Buterin. A major focus area was the intersection of AI and blockchain technologies, exploring zero-knowledge models for privacy-preserving AI, smart wallet upgrades incorporating AI capabilities, and decentralized AI use cases and infrastructure. With global regulation accelerating, Consensus 2025 brought clarity to shifting policies through deep dives with US and global regulators, discussions on evolving compliance frameworks, and exploration of regulatory approaches across different jurisdictions. The agenda featured extensive sessions across decentralized finance and governance, covering the latest developments in DeFi protocols, tokenomics models, DAO governance structures, and real-world blockchain use cases. With Toronto hosting the event, significant attention was given to Canada's position in the crypto ecosystem, highlighting its pioneering role in approving the world's first Bitcoin and Ethereum ETFs and the country's regulatory approach to digital assets. The crypto market showed positive momentum during the conference, with Bitcoin reclaiming $104,000 and targeting the $110,000 level, while Ethereum showed strength with analysts eyeing a move to $3,200. Consensus 2025 arrived at a pivotal moment for the crypto industry, providing a platform for clarity on regulatory developments and showcasing the maturing integration of blockchain with traditional finance. As we wrap up this comprehensive review of the crypto market, let's distill what we've learned into some actionable trading advice. First, the overall market structure remains bullish, with Bitcoin consolidating above $100,000 and most major altcoins showing strength. However, the Fear and Greed Index at 65 suggests we're in greed territory, which warrants some caution. For Bitcoin, the key level to watch is $110,000. A decisive break above this resistance could accelerate momentum toward $125,000 to $150,000. However, given the recent consolidation, a pullback to test support at $98,000 wouldn't be surprising and could present a buying opportunity for long-term investors. Ethereum faces a critical juncture after the Pectra upgrade. The immediate outlook depends on whether ETH can reclaim the $2,700 resistance. The increased staking cap to 2,048 ETH could drive institutional participation, potentially supporting higher prices in the medium term. Solana's technical picture suggests potential for a rally toward $200 to $262 if the golden cross formation materializes. However, be mindful of the significant gap between current price and January's all-time high, which could lead to volatility. For Cardano, the extreme bullish positioning among retail traders, 89.56% long positions, creates both opportunity and risk. A break above 84 cents could trigger a rally toward $1, but be cautious of potential liquidations if support at 75 cents fails. Sui faces a critical test with the impending $265 million token unlock. If market absorption is strong, a break above $4.20 could lead to a retest of the all-time high at $5.35. However, token unlocks historically create selling pressure, so position sizing is crucial here. XRP's regulatory clarity provides a solid foundation for growth. The $2.60 resistance is key. A break above could open the path to $3 to $3.40. The potential for an XRP ETF approval by year-end adds another catalyst to watch. In terms of portfolio allocation, consider a barbell strategy in the current market. Maintain core positions in Bitcoin and Ethereum for stability, while allocating a smaller portion to high-potential altcoins like Solana, Cardano, Sui, and XRP for growth. Risk management remains paramount. Use stop losses, avoid excessive leverage, especially given the high leverage ratios in Ethereum, and never invest more than you can afford to lose. The insights from Token 2049 Dubai and Consensus 2025 Toronto suggest continued institutional adoption, integration of AI with blockchain, and a maturing regulatory landscape. These trends support the long-term bullish case for crypto assets while highlighting the importance of selectivity in choosing projects with strong fundamentals and real-world utility. That's all for this episode of Boni's Life. If you found this analysis helpful, please hit that like button, subscribe for more crypto insights, and share with your fellow crypto enthusiasts. Drop your questions and thoughts in the comments below, and I'll see you in the next episode. Until then, may your candles be green and your gains be exponential.